Welcome back. So today we will be discussing about what are the different modules in SAP. So you might have heard by now you are aware that SAP is an enterprise level planning software. Now it caters to the different departments of a particular organization. So what are the different modules that are available in SAP? SAP has some 70 plus widely used modules, and roughly I have seen somewhere around some one or two modules in SAP. So it can be more also, and this will keep increasing and decreasing depending upon the business requirement in real time. Some modules will be discontinued by the SAP, some will be newly added. It's all depending upon the business requirement. Coming back to what are the core modules apart from leaving many other modules, what are the core modules that are there which are basis for any organization is your finance, your controlling, your sales and distribution, your material management, your production planning, warehouse management, supply chain management, and a few companies they also use this project systems, plant maintenance. These are the core modules. Apart from that, you will also have some other modules like product lifecycle management. You'll have business intelligence. You'll have transport management. You'll have EHS, environment, health and safety. So there are different modules. So we'll look after what are the different modules and what they do in SAP. So what is this classification of modules in SAP is different functionalities, different organization functionalities are grouped together and categorized as modules. Different organization functionalities. What are the functionalities that we are aware of? Be it your finance activities, your sales activities, your material activities, material movement activities, buying activities, and then your logistics activities, your HR activities. Like that, you have many modules in SAP. Coming to finance activities. So in within finance also, there are many areas within SAP. So the core and basic module of finance is nothing but your financial accounting. So financial accounting is nothing but it is also called as R2R. R2R means record to report. The purpose of this module is to record the financial information in the ledger books and then produce or deduce reports from that. Okay. So like you will record all the transactions, basically your customer, vendor, invoices, payments, collections, everything, disputes, whatever are there, credits, credit memos, debit memos, everything you record in financial accounting. You record it in the ledger books. Ledger books are nothing but where you record, like how you have your bank. For example, if you take any of your bank account and you take the bank statement, what will it have? It'll have list of all the transactions that you have made in that particular month. Same way, in organization also, you should keep recording the different financial activities that happen. That financial activity might involve the transactions that you do with the customer, the transactions that you do with a vendor, the transactions that you do deal with a bank, like different categories of transactions will be there. When you again further go in depth, if you deal with your customer, sometimes your customer will make a purchase and then you will issue an invoice asking him to make the payment. That particular transaction, okay, I have to receive so and so amount of money from so and so customer. You will record this information in finance. And then later on, you will ask the customer to make the payment. You will give you some 20 days or 30 days of time limit. And then after the customer pays back, then the payment is also recorded in your on your customer in the system, what all transactions you have dealt. And finally, at the end of the month, you can provide the customer statement, what are all transactions that happened on a particular customer for that particular month. Okay, so this is generally asked and usually done. Same case goes with vendor, whatever purchases we as a company, we procure externally, that might be raw material required for manufacturing, or else any of the assets, you purchase some assets in the organization for your organizational activity, like you need some vehicles or you need a machinery for your production process. So you might buy a lot of assets of your company, and every asset you buy, it will degrade its value over a period of time. For example, you bought an asset, you bought a car for, or you bought a truck for your organization, you spend some $20,000 or something, or 25,000 or $40,000. You bought a truck, and this truck will not have the same value the next year. It gets old, and the machine value will get depreciated, and you have to calculate this depreciation on the assets you purchase every month. Every month during the month end close, you might the value, usually if you take go for an insurance, you will get a clear understanding of it. Whenever you buy a particular product, if you get insurance for it, the first time they will say, first year they will give you the full value of the car. Second year, they will not reimburse the full value. They will say your asset value has reduced. First year, they might give you 95%. Second year, they'll say the value of the car is reduced to 80. Third year, they might say it is reduced to 60. Fourth year, they will say it is reduced to 40. Like that, every asset that we purchase, be it laptop, some countries like US says a laptop that is purchased by any organization will be depreciated within 3 years. That means these are the accounting standards that each and every country will mandate. So all these different categories of customers, vendors, assets, materials, all of them have to be recorded. All of the transactions, financial transactions that we deal with this particular different master data, we have to record it in finance. And then accordingly, you need to capture them or prepare reports. So you prepare balance sheet and income statement for your quarterly results. You will prepare it for your annual year closing. You need to do month-end closing activities. So you have to provide tax reports to the respective governments. All these activities are done in financial accounting. This is mostly used for your external reporting. Whereas now, okay,